Assalamualaikum, Miss Maizura. Today we will be presenting on stock and market analysis. Our group consists of 5 members, which is me, SHAMSUL ARIF, NAJWAN HAFIZ, AMIRUN HAKIM, AIMAN KAMIL, and also FARIS SYAQIL. The industry that we have chosen for the analysis was consumer product and services industry. There are 4 stock included, which is the DRB Highcom, NTPM Holding Berhad, Asia Group Berhad, and also Parkson Holding Berhad. What is FBM KCI? So it is actually one of the stock market index that act as a benchmark for the whole stock in Malaysia. So as we can see in 2017, the percentage return was increased by 9.45% compared to the previous year. This is due to the spike from by KLCCP Staple Group and SIMW Plantation Berhad. Next, we can see in 2018, the percentage return of KLCI dropped by 5.91%. This is because of the investors run out from the market as China PMI data dropped. So in 2019, the KLCI percentage return still going down by 6.02%. This is due to the US market overnight decline. We have chosen consumer product and services as our industry. The subsector that are included in this analysis includes travel, leisure and hospitality, automotive, retailers and also household goods. The consumer price index was taken from 2017 until 2019 in order to analyze the behavior of the consumer in Malaysia. As we can see in 2017, the CPI increases by 3.7%, while in 2018 it increases by 1.0%, and in 2019 it still shows an increment by 0.7%. When the CPI went up, we expect that the price of goods and services will go up as well.
Assalamualaikum warahmatullahi wabarakatuh. My name is Najwan Hafiz bin AZHAN, and today I'm going to explain about DRB Highcom analysis based on fundamental and technical. So fundamentally, the revenue of DRB Highcom does not change much in each year, which is from 2017 to 2018, but the highest revenue was in 2019 as much as 12.48 billion. But this does not mean that the peak performance was in 2019, but the peak performance was in 2018 due to the analysis of ROA and ROE and other ratios. So in 2018, the best ROA and ROE was in that year, because though it is relatively low than the ideal value, the ratio is still positive and highest compared to other years. And the ratio shows that it might be better in 2020, but I doubt that, because the COVID-19 might affect the business in 2020, so the revenue might not be very promising. And based on the ROE and ROA, the company is not very profitable and not very efficient at using its assets and equity to generate sales due to low ratio, and the worst ratio was in 2017. Though with low EPS in the year 2017 and 2019, the company still give out dividends, which is good for investors looking for income stocks. But I think apart from that, it is very fluctuation. There is also a high fluctuation of stock movement in 2017 to 2019. So I wouldn't recommend it for people who are trying to find growth stocks. So the company is actually focusing on development on integrated industrial parks and also better shared facilities for high-tech sectors. This is to support Industry 4.0, and this vision shows that the company, it has a good future for the company, but it will at least take more than 1 year or 2 years despite the virus situation. So in the technical part, it faces long-term uptrend in 2017, and it fluctuates between uptrend and downtrend in 2018. And the company's stock price sets an accumulation phase at the end of 2018, and the markup phase starts at 2019. And the peak performance of the company was in August 2019, between 2017 to 2019, which it reaches the highest resistance level, and it starts the distribution phase from there. So in this phase, people are in fear due to indecisive movement of the stock, because once it reaches the peak performance or the highest point, it will go down, and it will be a difficult time for the stock to burst to the resistance level and go up to a new high. So in the next market phase, based on the market cycle, the company is entering a markdown phase, and the existing investors will not be in luck as the stock price will fall. So it is suggested that the new investors will wait until mid-2020 or much later on than 2020, maybe in 2021, for the stock to re-enter the accumulation phase again so that they can enjoy the next markup phase. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. My name is AIMAN KAMIL bin Ahmad SYAQIL and I am from JBC 2514D. Okay, so today I would like to talk and present about my stock, which is AirAsia, from 2017 until 2019. For these 3 years, I can see that the revenue is increasing. As in 2017, the revenue is 9 billion, is around 9 billion. 2018 is around 10 billion and 2019 is around 11 billion, which shows a good performance by this company to maintain its trend, increasing trend. Okay, so next we go to the profitability ratio, which is ROE. Okay, as we know that normal ROE would be 10% and above, which shows a good sign that the company is doing well. So in the chart, we can see that in 2017, it is 19.52%, and while in 2018, it is 21.78%, which shows that the company is doing well. But in 2019, we can see that the ROE, or return on equity, is negative 6.3%, which to me it is shows that the company is not doing good at the moment in 2019. Okay, let's go into the technical part. Okay, so in early of 2017, we can see that the stock or the price is showing an uptrend movement until the end of 2017, which to me it is good, and it peaks in early of 2018, which at price of 4.74, and suddenly it drops drastically in the middle of 2018 and shows a pattern of head and shoulder, a big head and shoulder, which we know that a head and shoulder pattern is a reversal trend pattern. From up, then it goes down. Okay, so to me, I can see that in a long term, in a future projection, the current trend is long term downtrend. Okay, as the long-term trend line shows that it moves downwards. Yes, and we can see that many supports and resistance has been hit, and it rejects many times, which we can say that the price is continuously going down. Okay, and one more thing, during the dividend payment, we can say that the price will slightly go up, as it acts as a catalyst to a price changes. As we can see in this chart above, when during the dividend payment is given, the price spikes up. Even a slight changes gives a big impact to the company. Assalamualaikum. Thank you. That's all from me.
TPM Holdings Berhad was established in 1975 and their main factory and HQ office in Pulau Pinang, Malaysia. And TPM Holdings Berhad is involved in the manufacturing industries and trading paper and personal care products in Asian country and country in Europe continent. They produce a tissue product and personal care product like feminine product and baby products such as diapers. Based on the table above, this is the fundamental analysis for the company. First, it shows the revenue for the NTPM Holdings Berhad is increased positively in the 3 years back, which is on 2017 until 2019. Even the company revenue is increased between 2017 until 2019, but the return on asset or ROA is slightly decreased from 0.12 in 2018, 0.08 in 2018, and 0.02 in 2019. It is not a good result for the company because it means the growth of the company is not going well in the future. It is a sign that the company not able to use their asset to gain profit. Same goes to the company return on equity or ROE. The value is decreased year by year from 2017 until 2019, and it means the company is less in efficiency and shows that the company cannot make a profit without need a lot of capital. The company maybe have a mishandled issue. For the technical analysis, we use a chart between January 2017 until December 2019. For the technical analysis view, the company performance in the first quarter of 2017 is uptrend, but in just a short term, and it make a gap down in May 2017, and it come back uptrend for the third quarter of 2017. The performance of the company is not really well because it make a sideway for a few months before it become a mid-term downtrend trend line that as the investor, we need to avoid the downtrend phase. After the few months, in May 2018, it break the support downtrend and it want to change the direction to become uptrend. But the uptrend momentum is just in a month and it became a long-term downtrend again from June 2018 until the mid of September 2019. Again, as an investor in long term, we should avoid the downtrend stocks. When it breaks the downtrend line and it also act at the support line, we should take the opportunity to invest. It keep the uptrend until December of 2019 and make a gap down in opening of 2020.
Assalamualaikum warahmatullahi wabarakatuh. My name is AMIRUN HAKIM bin GHAZALI. So today I'm going to present about one of the stock company that our group has chosen to analyze, which is Pakcen Berhad. Okay, firstly, I'm starting my evaluation on Pakcen Berhad on its fundamental analysis, which is consists of the revenue of the company, earning per share, ROE, ROA, and also dividend. As you can see, on 2017 and 2018 and also 2019, the revenue of the company increased from 3.9 billion to 4 billion. But when we see on the earning per share and also ROA additional with ROE, the number of the revenue that they get doesn't get any sense with the number of downfall from the percentage of earning per share. So this shows that the company has to bear a long loss, and this is one of the company that, if we look on the fundamental, is not very suggestible to invest in the short term. But as you can see, in the long term, we need also to analyze with the technical analysis so that we can predict the movement of the company in the future. So we continue on technical analysis. As we can see on the technical chart, the overall movement of the price of the Pakcen Berhad chart shows a downtrend movement. As we can see from year 2017, it start to move down and also start a trend of lower low, indicating that the price of the stock are going downtrend. Continuing on 2018, the price of the stock is continuing also to continue downtrend with the sign of double top, which indicate on continuation of downtrend. And what of the end result of 2017, what we can see is that the company are facing a major sideways that indicating the price movement are not going to increase as well. So in my evaluation of to invest in the company for long term based on the technical chart, it seems like that is not very suggestible for investor to invest in the company, as there is no signal for improvement in moving to uptrend on the price of the stock of the company.
Based on the stock that have been analyzed, the most recommended stock to be invested in 2020 will be NTPM Holding Berhad. Why? As we look in 2019, as KLCI goes bearish, the NTPM Holding Berhad stock goes bullish. This proves that the stock is strong against the bearish market. In terms of technical analysis, the downtrend movement has ended on September of 2019, as a new higher high also have been created as a confirmation of uptrend movement. Next, by looking at the historical data, it is clear that from 2017 until 2019, the company's revenue shown the increasement in value, where it was from 645.25 million in 2017 to 728.05 million in 2019. The ROA and also the ROE, which is the return on asset and also the return on equity percentage, also have shown the positive value since 2017 until 2019. Based on that, we can tell that the company performance is good, as they can generate return based on their assets and equities for the past 3 years.